we are seeing some more strengthening coming in the local currency. And yesterday we saw the Kenyan shilling farming 0.3% to close at 86.75.85. That was on Tuesday. And this was after the central bank sold dollars for the second day in a row. And of course, this was to help prop up the shilling, which had fallen to a 5-month low of 87.55.75 to the US currency. Crossing over to the Nairobi Securities Exchange, we saw stocks on the other hand extending gains for the 6th consecutive day in a row, and the main share index added 0.8% to close at 4,786.47 points, and this is the highest level that the index has closed at since June 14th. Our market watcher for the day is Alistair Gould. He's the head of trading at Old Mutual Securities. Many thanks for joining us. Looking at activity from yesterday, we saw BAT was one of the counters that rallied to about 3% to 572 shillings. And this is one of the very high prices that we have at the stock market. Yeah. And of course, this was also on the back of the 11% profit that they reported for the first half. How for you do you see the second half faring for this particular company?
Well, BAT is a strong performer anywhere in the world where they operate, and Kenya is no difference in as far as BAT goes. It's a very solid company, and they always deliver very good dividends to investors. So it's a highly sought after stock, hence the high price that we may see, but investors are always willing. It's not very liquid, so sometimes investors are willing to pay a premium just to be able to have it on their books. But it's definitely been a consistent stock, very good performance since last year. How
much of a premium do you see it getting to?
Well, wow, for me at this price, I wouldn't be picking it up. I think there are discounts elsewhere, but for some investors, it's simply for the exposure and to have it on their as part of their assets.
Mm-hmm. Yeah. Okay, and looking at Safaricom, which is the most traded in the Nairobi Securities Exchange, we also saw it yesterday rallying nearly 2%.
Yes.
And it closed at 740, a very good price also for this particular stock.
Yes.
I guess investors are quite happy with the after Safaricom won the lawsuit against Faulu Kenya, the microfinance that had sued them for M-Shwari?
Well, I don't know about the legal side of that. I don't think there was too much of a risk from the word go. I didn't see a risk that was inherent in that particular lawsuit. However, investors are very bullish on Safaricom. Safaricom is almost like an index for our market, and it's the most traded. So yesterday we saw it touch a high of 750. We haven't seen that price in quite a while. So it's benefiting very fast from the recovery. We had close to 100% foreign buying and all local selling. So we could see a lot more of that today as well.
Mm-hmm. You mentioned that there are some stocks at a discount. Maybe you could give us 2 or 3 of those stocks that you considered heavily discounted?
Oh, well, I think not specifically any individual stocks, but the whole market really suffered big losses the whole month of June and early days of July, and we're only now seeing recovery. At the highest peak, I think our market was up more than 22% on the NSE 20. We are close to half that at the moment, so there's still quite some room for recovery, especially on the NSE 20 indexed stocks. I think there are a few out there that could still see potential, but I don't want to place my bets just yet.
All right. Yeah. We've seen most investors being very jittery about the VAT bill, and Kenya Airways for the first time actually came out yesterday and said that the VAT bill will really affect their fuel cost and also other costs, because it is proposing taxes on jet fuel, it's proposing taxes on leasing and new purchases of aircrafts. And KQ is now saying that they cannot afford it, because if it is passed in the current form, they'll be paying nearly 200 billion shillings in terms of the operational cost for those 3 things that I've mentioned. For you, what are some of the key challenges you see with this particular bill, especially looking at it from the Kenya Airways perspective?
Well, as you've put it, KQ will really be hard-pressed to return any profit if that is actually implemented, because their direct expenses will rally up significantly, and they'll literally be unmanageable. KQ will remain a loss-making institution, which isn't really useful to the economy or to investors. So it's up to the government to just weigh the pros and cons of having KQ as a profitable institution or not. I think in its present form, it's still debatable, and maybe they're just being a little too hard. I think the government just needs to look for other ways to raise money to plug the budget deficit, and not necessarily through the VAT bill. We've seen it raise the tension amongst consumers across the board, from the man on the street complaining about the potential rise in food prices to the corporates. So this is something that the government really needs to reconsider before putting it into law. Yeah.
But this is an airline that seems to be flying into headwinds from time to time, and now you're seeing Ethiopian Airlines saying that they have acquired 49% in Air Malawi.
Yes.
And of course Kenya Airways is very strong on the African foothold.
Yeah.
The fact that now Ethiopian Airline is getting into stuff, acquiring that stake in Air Malawi, what is the future for Kenya Airways?
Well, I mean, they'll really have to think outside the box a little bit. They'll have to determine different ways of generating a lot more on the top line while managing their costs, without necessarily going too much into trading and fuel hedging, which has hit them both ways in the past. But I think they just really need to rethink their operations as a whole and overhaul the company. They're in the middle of an expansion plan, a very ambitious plan that's really going to be capital intensive, but they just might have to relook at that strategy and look for new markets where there still is opportunity for them. African routes still seem to be very profitable, and perhaps they just need to look into a few more of those.
And let's hope that they're listening to you at this particular point in time. Now, talking of strategy, Ken Okobila has announced that they'll also postpone their acquisition strategy that they were planning to about 2 to 3 years. For you, what do you read into this?
Well, basically, I think on the back of the big loss that they recently reported and the share price misperformance, it's actually the worst performing stock this year, down close to 40%. I think they just feel that at the moment, if they were to bring in an investor, they wouldn't get value for where their price is, because it would be pegged to a premium on the current price. Well, down 40%, that just says that they would really get very little for quite a large stake into the company. So I think they just want to reorganize themselves as well, and try and return to profitability, make the company a lot more attractive than it currently is. We think it actually has a lot of potential as a company. It's got a good distribution, very wide reach across the continent. They just need to come back into profit territory, and definitely,
which they have, because in the first half they did go back to the 3.32 billion shillings.
I mean, let's wait for the full year. Yes. And any investor would want to see a bit of a track record, hence them suggesting that they want to give it 2 to 3 years.
Are you optimistic of the full year in the second half performance?
Pretty optimistic, yes.
All right.